Hi guys, it's Pook again with Dad's Financial Corner, vaccinated father of two amazing boys surviving through COVID times. I know it's been a while since my last video, so I know you guys have been eagerly awaiting. So, what could be better to talk about today besides everyone's favorite subject this time of year, taxes? Yep, it's tax time once again. It's like it never left us. I know for most of us, it's that time of year you put off until the last minute. Hope to get it done with as quickly as possible and then try to put it behind you until you have to deal with it again next year. But this is the totally wrong attitude. And if you don't give it the time it needs, it's going to cost you in cold hard cash. Now, I'm not a tax professional any longer, and tax laws are constantly changing with new administrations and congressional bodies. So always consult with a professional tax preparer or accountant who knows your specific situation best and is up to date with current tax law. Now, that being said, here are my top 5 things that I notice families getting wrong with their taxes and my tips for improving your tax situation. Number 1, not educating yourself about your tax situation. The wealthiest people in this country know that taxes can and often is their biggest single expense every single year. That's why they don't leave it to the last minute nor chance. You either learn and take advantage of every aspect of the tax code that you can, or hire an expert to do, or to hire an expert that will help you do it. It's usually worth the time and money to do so. Every other mistake on this list pretty much derives from not educating yourself about what you don't know about the tax code and optimizing your tax situation. Number 2, did you get a huge refund this last year? What if I told you that's another big mistake? You may be asking, what you talking about, Willis? Well, you need to understand what a refund is. It's a return of money that the government owed you during the year because you withheld too much or overpaid in estimated payments. Basically, that means you could have been pocketing that money during the year, putting it to good use, investing it, or paying off debt that you would have otherwise cost you more money. Now, the average refund that the IRS sends out is about $3,000. Imagine. That means you could have been taking home an extra $250 a month instead of letting the federal government hold on to your money interest free until you file your taxes each year. Number 3, waiting until the last minute to file your taxes or putting off your tax decisions until March or April of each year. Perhaps you think your taxes are easy and you expect a refund. Then what are you waiting for? Get it done early. Get your money back in your pocket. Maybe you expect your return to be complicated or will owe additional taxes. Well, guess what? Just because you owe money, it doesn't push off the fact that you need to pay by tax day. Find out early exactly how much you owe, put together a plan for saving enough to pay for at least some, if not all of it. Even if you file an extension for filing your taxes later, paying something towards what you owe by tax day means that you won't need to pay the penalties and fees for being late on your payment later, which is typically a percentage of what you owe. So do yourself a favor and don't make things worse by being late on what you expect to owe. You can either think of tax planning as a chore or an opportunity. Number 4, not taking advantage of operating a business. Now, many of us start off as employees and live our whole professional lives working for someone else, which means for the most part, most of us leave the minutia of tax withholding and deductions in the hands of other people. Now, this is because, for the most part, as an employee making a W-2 income, we have very little control as to what is reported and thus owed to the IRS. That's why most of us don't understand the importance of expenses and how owning a business allows you to control and affect your overall taxable income. With the crazy pandemic year we just had, the economy has lost a ton of jobs, which seems to have also resulted in a record year for American entrepreneurship, especially new home-based businesses, since so many of us are spending more time at home than ever before. Now, that tells me that there's probably more dads and moms than ever before out there learning how to do their taxes for a business for the very first time. The mistake that most people make is waiting until the end of the year to figure out what expenses they had during the year, some of which they will have forgotten or lost receipts for. Instead, you need to make tracking and coordinating your everyday activities a regular part of your daily routine throughout the year. Learn for yourself the types of activities that can rightfully be claimed as an expense so you can recognize it when it arises and you can keep a log or receipt where needed. For many new businesses, the startup expenses for that first year could exceed the income, which can actually be fine since the loss can be used to reduce other income you may have had during the year. And for most people, every $100 you can expense can in turn save you anywhere from $20 to $40 in actual taxes, depending on your bracket. Incorporating business activities such as marketing, meeting clients, or trips to the post office into other normally personal activities like going to the groceries or picking up coffee means that suddenly those miles that you drove can be claimed. Or maybe you're thinking bigger and you have a big trip ahead of you and your family needs to take anyways. Maybe plan to meet a new client or have a quick meeting at that same destination. And now you'll be able to claim some of those trip expenses. If you're growing your business, it's probably going to be a big part of your life anyways. So learn to take the expenses that you want and not just the ones that you have to. Last, number 5, not reviewing your withholding status on your paycheck or estimated payments. For those of you who are working more than one job and maybe you had to take money out, or maybe you had to take money out early from one of your retirement accounts this year, or perhaps you cashed out a significant amount of investments and forgot to check off the automatic withholding box. Especially now with people changing jobs so frequently or holding multiple part-time jobs during the year, the formula most paycheck administrators use doesn't usually quite account for the often complicated and varying income situations that many households are in nowadays. Most of the time, the options most people default to only account for the most basic scenarios, where there's just 1 or 2 jobs held in the household for the entire year. Now, when that's true, predicting how much withholding will be needed is fairly easy. But if you've changed jobs during the year or concurrently have had 2 or more jobs per person, or if you are just new to the whole self-employed lifestyle, then being aware of your tax withholding and estimated quarterly payments is a lot more important. My own situation comes to mind from a few years back when my wife switched jobs a couple months into the year and then took on a second part-time position. Despite her making sure she was claiming the same number of exemptions on her W-4, we ended up having under-withheld by about $5,000 when it came time to do our taxes, which resulted in added penalties on top of that tax bill. I can tell you, that was not fun. So do yourself a favor. If you know the year is going to look complicated, don't ignore your pay stub. Look at how much is being withheld on your behalf and project how much in total will be withheld by the end of the year. Then figure out what your total estimated income will be for the year and use one of the many tax estimation tools available online to get a ballpark on how much will be due. If it's off by only like $1,000 or less, then it's not a big deal. You won't get penalized. But if it looks like you're not withholding enough, talk to your HR department about completing a new W-4 and adjust it accordingly. It'll save yourself a big hassle later on. All right, guys. Thanks again for checking out Dad's Financial Corner. Don't forget to smash that like and subscribe button below. It really helps the channel. Now, I'd love to hear your crazy tax stories and planning mishaps or successes. So leave a comment and shoot me an email at dadsfinancialcorner@gmail.com. Again, I'm still hoping to put together some giveaways, maybe on the next video for you guys in upcoming or other upcoming episodes. So be sure to subscribe to hear about it first. In the meanwhile, I hope you dads and moms out there keep making smart financial decisions for you and your family. All right, take care.